All right. So I want to go around and have you guys introduce yourselves and give a little bit of a brief background about yourself and where you are in this multifamily space and why you feel like you're a good person to be here on this Raising Capital panel. And then we also want you to talk and share a little bit about how much capital you have raised to date with some of the projects that you have been a part of.
This is Ryan McKenna, founder of McKenna Capital. Kind of similar background, got into real estate investing 2006, kind of dipped my toe in the water with some single family rentals. And then around 2016 was when I really started investing passively in multifamily syndications and have done a lot of deals since then. But the capital raising portion of my business has really been about 18 months since I started that. And that was really kind of predicated around, me doing some investments on my own, but expanding, my network, friends and family, others that were interested in doing what I was doing. And then now kind of, building a business around showing them how they can invest in these opportunities as well. So it's been great from a networking standpoint, but also just to see the business grow and to be able to invest in a lot of deals. And it's been kind of a fun ride. We've been very, very busy with everything. And we basically provide, we're co-syndicators as well. So we provide opportunities to invest in multifamily syndications. We've done self-storage and manufactured home parks as well. To date, we've raised over $25 million and done about 21 deals. So been very active and it's been, great working with a lot of investors out there. So any perspective I can share on just how I started from nothing 18 months ago, not even knowing about this portion of the GP, being able to help from that perspective to, really getting very involved and, doing multi-million-dollar raises, kind of deal after deal. So it's been, kind of a great run and looking forward to, learning from others as well as I'm just happy to be here and, to participate on this panel.
So I'm going to have you, the last summit we did, we had you kind of go in a certain order. And this time I'm going to have you guys just kind of jump in as you guys feel like you can provide and share on the various topics. And the first question that I want to present to you guys is, what do you think for somebody who's new would be the most foundational or the most important foundational thing required for someone to have in order to be able to begin raising capital?
Yeah, one thing I wanted to add too is just kind of all on the same theme here of, relationships and your network. But like Julie said, I mean, I share experiences. Before I got in raised capital, I was investing in these deals passively myself. So I knew kind of what the deals look like, how to talk about them, my experiences. And so I could share that with someone that, has questions and, wants to know what this, looks and feels like. And so, my approach was always, this wasn't a sales pitch. This was an opportunity just to share with someone about something I was super passionate about that I felt really, good about. And at the end of the day, I looked at this as, I hope they would have thought of me as someone that they would want to share an opportunity like this if they came across it. So it was really, no pressure. It was just, hey, let's sit down, have some coffee. And I want to just chat with you about, what I'm doing. And so I had a lot of initial conversations like that, well before I had my first opportunity, just with people in my network. I was just planting the seed, letting them know what I was doing. So when the opportunity came around, it wasn't like I was striking up the first conversation about this. So it just kind of felt more natural. And I think kind of maybe planning ahead with your network. And, if you can start by first investing in deals yourself, I think that gives you, a little bit more credibility, but you can also get that by partnering with others as well. So that's just kind of my personal experience and kind of what's worked for me so far.
So let's pivot to another question that I have here. In your opinion, do you feel like you need your own money to invest in your deals before you begin raising capital, or having, if you're raising capital for another group, should you be one that's invested in one of those in that particular deal as well? What's your opinion on that?
I try to invest in every deal that I can, but when you are doing a lot of deals, sometimes it is difficult from a cash flow standpoint to just have everything, available at that point in time. And so, yeah, the intentions are there and you try to do the best job you can. But I think if someone's, questioning whether you're committed or not, I mean, I left the corporate world 3 months ago. I left a very lucrative job to pursue this full time to help more investors invest in great opportunities. So I'm 100% committed, walking away from a lot to build this. And I think they would understand that, look, I'm trying to do my best to invest in every opportunity I can because I believe in them. But, you know, at the end of the day, I mean, the money does add up, and you're putting a lot of money out there, and, you know, sometimes the timing just doesn't work for you, but that doesn't mean it's a bad deal or that they shouldn't invest in it. So that's kind of my take.
Yeah, I agree with the timing aspect, because you might have something coming back to you, but it could be a couple months from now and you don't have it right there, but you can contribute to a deal by raising capital. Absolutely.
I agree with everything Oz said.
What I was going to tie it up here and just kind of say that, you know, I think in a perfect world, yes, we should all invest in every deal like that. But like you all have said, it all depends on the timing. And, you know, when you're putting these deals together as well, I mean, there's also liquidity requirements that you have to have from the lender's perspective. And so depending on the size of the deal and how much money you have available, it can sometimes get tied up from that instead of, you know, having to being able to invest in all the projects. So great answers to that question. Next question here is how do you manage your investors? So what kind of things do you use resources wise, or systems or processes do you use for your investor relations? So, you know, once somebody comes to your website or reaches out to you or you meet them at a conference, what's your process in the back end look like from a follow-up standpoint?
Before or after the investment, Dan?
I would say both.
All right.
Yeah, I would say for me, when an investor signs up on our website, I have it kind of automated through MailChimp, but the first thing is to set up a call with them. And I have I use Calendly for that. So there's an easy link to my, schedule, and they can set up a 15-30-minute call, and we can get to know each other, talk about, their investment goals and kind of what they're looking to get out of potentially, maybe an upcoming opportunity we might have. And so we just begin that dialogue. And then obviously, if it makes sense to kind of keep talking, then they'll go into our distribution list so we can kind of share things that we're working on, updates. We have a monthly newsletter, we have blogs that we're putting out, and it's just a way for us to stay engaged. And I always try to make myself available anytime for a call or if they have questions over email. But MailChimp has really allowed me to streamline what we do and be able to, once the investor is qualified, to share everything that we're working on in a very efficient manner where I can put together kind of one template for a particular deal, and it can go out to, many investors. And, we just kind of process built for when we, take soft reserves and kind of track all that. And then, once a deal closes, then it's usually monthly communications coming from me, and it's all managed through MailChimp, and how the deal is performing and just kind of the latest project updates with things that are going on, with that apartment complex. And it's a great way to stay in contact, and it's pretty easy once you get it set up, and it allows you to really scale your business.
Yeah, I have a question that's come in from Neil, and it has to do with the one of our first questions we had about kind of building relationships and having that foundation built. And so his question is what are some empowering questions that you ask your new relationships that you have in order to be able to build those relationships into wanting to build a kind of merge that relationship into the multifamily space?
Yeah. In my case, usually when an investor reaches out, they've typically done some homework, or we've captured them in some way through the sales funnel. So there's an interest of wanting to learn more and potentially invest. So I try to find out, the experiences they've had. Have they done this before, or is this just something they've heard about? Just to kind of see, what their experience level is. But then also going deeper of, a lot of these investors have money in the stock market. And so you're having the conversation about the difference between, investing in real estate syndication, and then even going one step further, there's some of the tax benefits that come into play that a lot of people are, that might not know about it, but they're very interested in hearing how some of our deals are structured, some of the other benefits. So try to kind of capture all that. But I also, at the end of the day, I let them know that these are illiquid investments. The last thing we want is someone to put their money in the deal that, next month they need it to pay their mortgage, or, they're going to be unhappy if they don't get a good update. And I just let them know up front that they're not going to be a good investor for a good fit for us if they're, looking at this as like the stock market where they can, press sell and 2 days later get their money back. And so I'm very upfront because I think they need to know that. And most, get it. That's why we have kind of some outsized returns compared to the stock market. But in return, you are in little bit more illiquid investment. So I just want to make sure that that is, front and clear for them, so that going forward, you're not getting those, daily calls or updates of, hey, how's my money doing? This is a long-term play for all these deals.
Well, there's always this question about preferred returns. Okay. Like, should you do a preferred return? Should you not? And Ruben's asking the question of, are you finding that your more sophisticated investors are wanting that preferred return?
It doesn't have to be 8%.
Yeah. And I've seen, 7-8%, but I've also seen deals without a preferred return. And I feel like, in today's market, we have seen a lot more of the preferred returns. But I've personally invested in several opportunities that didn't have a preferred return. And me as an investor, I was looking at their track record and their performance and how well they've done over the last 15, 20 years. And they started out with a preferred return, but over time they had really happy investors that just kept reinvesting, and that preferred return went away. And it became less and less of a, issue because they were looking at long-term, how well they were performing, and that it just, if you wanted to invest with them, this is just how it was going to be. And I think, some groups that's just how they operate. And so each deal is slightly different, but I don't think it's, if you have it or not, it's going to end up, making or breaking an opportunity for some investors.
Along these same lines, there was a question that came in about this same topic here. Okay. Do you structure your deals where you your deals where you solely own the property going forward after a refinance? Any other comments on that one?
I mean, I've seen it before, but it's been on some smaller deals. And I love being able to tell an investor, no, you're going to keep your equity position. You're going to continue to keep receiving, distributions. And when it, exits at some point, you're still going to, receive returns. So I think that's just a much better way to, have that investor alignment. And also you're thinking more long-term as them as, an investor in multiple deals versus like, I feel like if they're not aware of this, they might feel like, I don't know, that it's kind of one-sided, or could be. And that feeling, because I've had other investors that have asked me, they've been in those deals that they're like, I just wanted to double check because, I don't want to invest in a deal that's kind of structured that way. So I think, long-term, I think it's a good thing because the money will come back many times over if you have happy investors out there.
Yep. On the same topics of different, structures and stuff as well. Chad has a question here is would you ever offer a preferred return for certain levels of equity to encourage larger contribution versus non-preferred if that threshold is not met, or maybe a stair-step return depending on equity contribution? For example, 1 million is 8%, 2 million is 9%, et cetera.
Yeah, I would agree with Mark. I mean, I've seen it, and it's great for certain group of investors that can invest, those types of, amounts. And they typically know about that too, because they're generally going and approaching you to say, look, if I put in 500,000 or $1 million, I want a better deal. And so, but yeah, for your average investor, it's usually something that doesn't come into play and can be confusing if you have kind of too many, different arrangements from, who gets what in a deal. So, yeah, I definitely think it's great. But it's all depends on kind of who you're targeting and who your investors are as well.
Good. And one last question along the same lines is, do you typically require a $50,000 minimum in your investments, or are there different scenarios where you might have a lower investment that would be considered?
Yeah, where I've seen it is typically the minimum's 50, and there can be flexibility in certain deals or maybe repeat investors. And, a lot of that just happens to be based upon, how the sponsor wants to set up the deal. I haven't seen a deal higher than 50. And I know just a lot of my investors, what they typically like to do is they're trying to build their own little private equity real estate portfolio. So they want to take positions in many deals. And, if they're investing $50,000 a deal and they're doing, 5, 6, 7 deals, that, adds up over time. So I think every once in a while, it's nice that, they can get in for a deal at 25 just because, maybe from a capital standpoint, that's all they really have. But it's not like the deal is marketed at, hey, everyone can get in at 25. It's typically 50. And sometimes we have flexibility and sometimes we don't.
Yeah. So let's pivot here to another question that we have from Devin. His question is about your top 3 key pain points where you have to spend most of your valuable time on, and how are you seeing those pain points getting easier now that you're raising more and more money for your various projects?
Yeah, I think that our time is the biggest and most valuable thing we have in our business here, and we want to maximize it. And so I'm trying to kind of outsource any sort of like administrative tasks, or try to kind of, put systems in place and processes in place that can take some of the workload off of what I do, so that I can spend time on, those meaningful conversations with new investors or repeat investors. And I would say on the front end, yeah, there's a lot of investor calls that happen, especially with new investors. But as they, learn more, get more comfortable, and then do a deal or do multiple deals, it gets a little bit easier with repeat investors because they kind of know and understand it. And they're great, sales force for you as well, because they're bringing in, typically I see a lot of people when they invest, they've got friends that invest with them. And so that's been great to kind of see. And it speeds up the process a little bit, because they are already, they're spreading the word about what you're doing and their experience they're having. And so when someone comes in from that, that perspective, it's a much easier conversation. And, they're somewhat, pre-qualified from the friendship and the relationship you have, and they know kind of the criteria and how the deals are structured. And so those are types of conversations I enjoy having. But yeah, a lot of times it's also filtering out like who comes to your site. Like I've had people come to my site that aren't investors. They just want to sell you something. And so I have to weed out those people. I don't even respond to them anymore, because it takes up my time, and it's frustrating because they might appear to be an investor, but they're just wanting to sell you something, and you just wasted a half hour of my time where I could have been talking with someone else. And so in those situations, I'll wait for someone to follow up with me multiple times. And then if there truly is something of value there that would make sense to talk, then I'll set that up. But I think getting, some guardrails around however you can, before you have that conversation, just knowing a little bit more about that investor, because you could be spinning your wheels on a conversation that maybe you shouldn't be having.
Oh yeah.
Yep.
All right. So another question here is about how you guys help your investors learn more about you and your experience when you speak with them when you speak with them either on the phone or in person. What are some things that you do to help them learn more about you?
I just share my background and my story. I mean, I tell them we're in this together. This is like, to me, I've got a sports background, so this is like a team sport. We're all participating, maybe a smaller piece of a larger deal, but we're all in this together. It's not like they invest in a deal and the relationship goes away. I mean, we're there through the whole life cycle of this. And so I just tell them, I typically, was in a position that they're in today. If they were a working professional, I mean, I was in that position, and I built enough passive income on the side through investing in these real estate syndications to walk away from that. So I feel like I've got a story that, worked for me, that most investors, that I talk to, that's what they want. They want the freedom and flexibility of investing through these real estate syndications. And so that's a big reason why they do these deals. And I look at myself, I'm living proof. I did it, and I did it in a very short period of time, but it took, many years in the corporate world of making good money and being smart with it to be in a position to actually have the capital to invest. Then I was able to do it in this structure. It really changed my life. And so I love to share kind of what I went through, because for the most part, a lot of people tell me that's what they want too. And so I can answer any questions around that process and kind of show them how I did it and give an example or two of, how it all played out. And so I try to talk about them, but a lot of times that, they're asking, or, to kind of Julie's point, they've seen a podcast or a blog or listen to a podcast. They kind of maybe know my story, and they might just have a few, more detailed questions around that. And so I can then really kind of pinpoint and maybe share it from that aspect. So I think it's the best thing you can do when you're building relationships with people out there, is to let them know, like, hey, it wasn't easy, but I did it, and you can do it too. And here's how this process works.
So the last question that I have is, go ahead and just probably like a, very short 1 to 3 sentence thing here, if you can. What is one piece of advice that you would give anyone getting started with raising capital?
Yeah, I would say find the right partners to work with, find a mentor, someone out there that maybe is doing what you want to do, and learn from them, learn from others' mistakes, and just surround yourself with good people that are, are willing to help you, and always be building relationships. I mean, that's the number one thing that I've seen out there where people have had success, is just building their network and building deep relationships. So never lose sight of that, and always be out there learning, be curious, and life will be good to you.